What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is July 6th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to talk about the continued bloodbath in cryptocurrency markets that we've experienced over the last couple of days. I thought I'd do a special Saturday upload here just to share my thoughts with you guys a bit more urgently on the markets, why I do believe that there's still a good chance we can continue correcting, but also at the same time, why we may be getting towards a range where there's some value opportunities in the market, where we finally can get those capitulative buys that will allow us to make multiples in the event that crypto continues moving higher to new all-time highs. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like. Let's go ahead and kick things off. Well, guys, as you all know, we've probably been in the minority here for the past few months, as a lot of people were getting bullish with this consolidation range here. We were talking about the fact that this was one of the longest periods of time we've spent at a previous all-time high. And it is very clear by the reaction of price against those longer term moving averages, the inability to maintain our shorter term time frame moving averages, like the 4-hour moving averages or the 21-day EMA pocket. It was very clear here that price was sending signals that it wasn't ready to move higher, and at first needed a capitulation event here. And we've seen very clearly from the prior all-time highs here at around right under $74,000, we came all the way down to right around $53.5 thousand per Bitcoin. Wow. Not to mention, if we take it over to the others chart, you all remember the number we have been emphasizing here has been a 50% correction from the all-time high, or at least the relative highs of this cycle in altcoins, from around $360 billion down here towards $180 billion. And look exactly where we hit back on Friday. I made some wrong calls here before on the channel, guys, but I think we nailed that pretty good. Now, I want to start by saying one quick thing, and this is going to play into the important discussion point of where we stand in markets and going forward where things are likely going to play out. I want to start by saying, for those who have been more bullish on the market, for those of you who have been holding positions, who stuck more towards their bullish thesis, I want to say to you guys, I've been there before. This is not me trying to sit here and say that, I always get the markets right. There are definitely times where I've gotten it wrong. We missed a lot of the initial part of the run-up into the ETF launch for Bitcoin in 2023. So I'm not going to sit here and just mention my merits of when I get things right and ignore when I get them wrong. I'm just here to say, though, that as time progresses, I've really tried to hone in and learn from my mistakes. And one of the biggest things, the biggest takeaways I think anyone could take is that you can't fall in love with a narrative or position that you're holding. You need to treat Bitcoin as any other asset out there. Put aside there's only 21 million coins, or Michael Saylor and MicroStrategy are buying, and the ETF is going to open the floodgates, all these visual metaphors or reasons for why you should go long something. If you aren't listening to the moving averages, if you aren't listening to what price and the market is telling you, you will eventually lose. And this is something that is so imperative, because I don't want you guys to lose money. I want you guys to win. So this leads me to talking about my next step. I don't want to ramble on too much about that, but I hope those words can mean a lot to many of you out there who might have been on the other side of the trade. We've been mainly in cash, and I want to talk about whether or not you're in positions now or in cash, what we really can do here. Because now that we're currently, if we even take it at current market price, we bounced up a little bit. We're here down 44% here for others market cap versus the broader market. When it comes to Bitcoin, we can go ahead and get a measure here from the top here. We're around 23.5% down. We went to a total of 27% down. And I know a lot of people are wondering whether or not it's time to buy here. And I'm going to go ahead and give you, I think, a very simple and clear answer here. I think that overall, and I think Russ has indicated similar sentiment as well. He'll probably talk more about that on his next video, probably back on Wednesday. But the main thing I want to emphasize here is that we're in a period where I think DCA, dollar cost averaging, is making sense. It makes sense overall to maybe start rolling into some positions, but at the same time having in mind, take profit levels along the way and stop losses in mind. I do not believe in the old ways of just hodl, especially when it comes to altcoins. Bitcoin might be a different story here, but at the end of the day, I'm going to trade it like any other asset. If I was going to trade Bitcoin, I'm going to be making sure that, again, we come down here to the shorter term time frames, that we're able to get above those short term moving averages. We're still getting held down by the 9 EMA and the 4-hour time frame. Not something that I really want to FOMO into, right? And again, we've seen that it can break through there, but then it gets shot down again at that 21-day, which is going to be creeping down over time, right? I need to see it clear through some of these moving averages to really give me the gauge that I can start taking excessive risk. And it's probably not going to be on Bitcoin. It's going to be on altcoins, right? If there's really that gauge there. So if you're seeing these kind of small rallies here and you're in positions and you're not seeing it be able to clear through those moving averages, you might want to slowly de-risk. And then you can rebuild positions if you start to see that strength come in, right? But the big thing above all is that so long as you're on that downtrend, we can't just take, one nice solid bounce here like we saw yesterday as, this is the end of the capitulation event, it's time to go long. We want to see those moving averages play out here because the thing is we don't need to nail the bottom on Bitcoin. Bitcoin is a gauge for risk on or risk off sentiment of the broader market. Bitcoin will lead first. If Bitcoin starts to show signs of optimism and starts to get above those moving averages and reclaim above the 200-day, I'm going to feel a lot more comfortable building positions in the altcoin space, especially if I see altcoins starting to follow. We start to see altcoin dominance moving up, right? We have not seen any significant trend yet in those yet. But let's take a quick review of the altcoin market here, right? Take a look at some of our narratives here in DePIN and AI. Take a look at Bitcoin infrastructure. Take a look at ordinals and meme coins. Just take a look at this. Fetch here, looking like it might be forming a nice temporary double bottom here. Might be able to come up and retest some of those moving averages, right? Down here at 125, much better than buying in at $3.50. A nice solid correction here, right? Much more favorable entry profile, much more favorable than a lot of people who are trying to buy here at 250, right? Buying into these breakouts near the 21-day, thinking that it was just going to continue higher when we were saying to remain in cash and wait for more confidence, right? You're talking about, again, a 50% discount from that range. Like, much more favorable, much better risk reward setups where you could set a stop loss at say like $1, you risk potentially losing 25%, but this thing could go much higher, right? If it starts to take off. Again, I'm not saying go all in, but this is a range where you could start to slowly DCA, build a little position, and maybe see how things play out. Take a look at Render, right? Same kind of accumulation range. This kind of $6 to $5 range where buyers tend to come in here in the past. And we got another bounce here, even though it went to the lowest level since back here in February, right? Again, leaves me a little bit concerned about the long-term strength and confidence of the altcoin market, but overall, much better risk reward setup here, right, than trying to buy up here, again at $11,000 where it was back in May. Patience pays here, guys. And again, the important thing to understand is that altcoins can give up a lot of the gains they make during a bull market or during a run-up in markets. Altcoins can really make great multiples, but they can give up a lot of those gains, so you have to be willing to lock those in. Last but not least as well here as well when it comes to kind of some of our more central narratives that we talk about, we also got stacks. Stacks bounced up here from 124 here to 140. Again, like still same price from back here in December 2023. Much better than where it was back here in March of 2024. But the question is, again, can we get above those shorter-term moving averages? Right now, we are pressing up against it. It's a question of can we really break through there? We're seeing that in Fetch. We're seeing it in a few plays. ORDI as well, right, one of the key ordinals plays, still getting faded at that shorter-term moving average. But again, if we take a look at the longer-term time frame here, just stepping back here, much better than where it was back in March at around $94. So if you are wanting to make the bet on the altcoin market here, you've got some plays that are at a significant discount here. One of the big things, though, I want to emphasize is it's not always about buying in to the play that is bleeding down the most, right? We do want to buy into corrections, but we want to buy into corrections on players that have, on the longer term time frame, been really strong, really over the past couple of weeks or months, and plays in which have done actually quite well and held up well during the broader correction in both Bitcoin and altcoins. And one of those plays is today's sponsor for the video, and that's Brett. Now, you guys have probably heard about Brett. It's one of the large meme coins out there. It's a $1 billion plus market cap coin, and it's been one of the most strong, resilient coins in the broader crypto space. Now, the analysis I'm giving you guys here today is my thoughts and my thoughts alone. I'm going to talk about my general price action around it, what I'm looking for here in regards to Brett, but these are my own thoughts here. And I think the biggest thing above all is that the first thing I notice here is that Brett is where it was back here on June 3rd of 2024. Now, I know a lot of people usually are looking for the biggest discount in the world, but for me, I'm looking for plays that are at a nice pullback, similar to where Brett is. Brett is pulled back here from around 17 cents the other day down here towards around 12 cents. And at the same time, it hasn't bled so heavily as the rest of the market. There are a lot of meme coins out there that are down 50, 60, 70, 80% in their price action during this window of time. and are back where they were back in like December of 2023 or January 2024. Whereas Brett here is right back where it was here in June. So this has been a play that really during this whole capitulation period that's really been since back in March or April, we've seen Brett here actually continuing its uptrend. So I like seeing that here. Now, there is a potential for altcoins to continue moving lower. And in that case, I might look for the kind of lower price range here that might be interesting to potentially get accumulation in. But irrespective, if it continues to hold this range here, this is, again, I think going to be a testament to the fact that Brett has really been one of the best plays here in regards to the recent Mt. Gox sell-off, which is what we're going to be talking about here. I know a lot of people are wondering why the sell-off is happening and whether or not it could get worse. So we want to talk about that a little bit here. But overall, Brett has been one of the more resilient plays here in the meme coin sector. And the reason is it's in the base ecosystem. This is one of the hottest L2s. It's got the network effect of Coinbase, and this is going to give it a huge strategic advantage, seeing as it is the biggest meme coin in that ecosystem, almost the native meme coin of the chain. So definitely keep an eye on it here. Again, as with altcoins, I'm going to give it a fair analysis here. You got to get above those short-term moving averages here to really get me excited and be able to start trending higher. From there, that can give me the kind of confidence gauge where I might be willing to build positions here. Same as we saw back here, right? When you clear through those moving averages, you get continuation in price. When you clear through those moving averages from the lows, you continue in price here. This is a very important gauge, not just for meme coins, but all altcoins as well. So keep an eye on it. You guys can check out the links down below in the description if you're interested to learn a little bit more about Brett as a project, but it's definitely one to keep on your radar. The big thing I wanted to go ahead and talk about, though, is why markets are selling here. Now, I think that there are already enough good reasons to understand why Bitcoin is moving lower. ETF flows month by month by month have gotten weaker. This is really, I think, a late stage catalyst for crypto, signifying that, you know, all the potential on-ramps, anyone who wants to buy Bitcoin can buy Bitcoin here today. And because that reality has set in, it does leave an important question of what's going to be the catalyst for a new bull market, or let alone a continuation from the current resistance point at $60,000, $70,000, this general range that we were trapped in back in 2021. These are the kind of things we've been asking for a long time, and I haven't really been able to get good answers from anyone. I just hear that, oh, the floodgates will open, you just got to give institutions time, it's slow and steady. Look, the inflows have gotten weaker, guys, and you're going to need a lot more to satisfy the sell side pressure from the market in order to continue that. But there's a big thing going on right now, and that is obviously the selling for Mt. Gox and the German government. These are the two big things you've probably heard a lot about here. And I'm going to bring some pretty bad news here today from at least what I can observe on the most valuable metric we have, which is on-chain analytics. And that is that while a lot of people are under the impression that the selling we've seen over the last few days is from Mt. Gox, or Magic the Gathering Online Exchange. It used to be the biggest Bitcoin exchange back in 2013. It got hacked, and they've since been able to recover a lot of those funds, but they've been going through a more than decade-long process of remuneration, or essentially giving back these Bitcoin back to the original holders. It's an $8 billion position of Bitcoin, over 141,000 Bitcoin, so this is no laughing matter that they are going to start the refund process for these Bitcoin. But beyond that as well, there's also the German government here as well, which still currently holds around 40K position here. That has dropped since from around 50,000 here to around 40K. The point I want to bring here is that we've still got a lot of sell-side pressure that has not hit the books. Mt. Gox has not even started refunding users properly. And an important dynamic that you need to keep in mind that a lot of people are not talking about, that it is very difficult to find in the articles that talk about this topic, is that all these Bitcoin are not going back to their original holders. It's about, probably equates to about 15%, roughly speaking, that is going back to the original holders. They can be happy to some degree that they're getting a higher dollar value probably than what they originally owned, because Bitcoin has multiplied so many times since back on Mt. Gox. But the problem with it is that essentially under Japanese bankruptcy law, they are essentially only required to give back essentially, I think, enough to cover the original position. So essentially the Mt. Gox trustee, I don't really know all the details around, but I will say that if they're not giving back to the users, then we've got a whale here who's got a very large position where this is a huge potential black swan event. And we've seen that during market euphoria, if we come over here, this is one of the longest standing tools, Glassnode Studio. It's a paid tool that I'm subscribed to. We can see that they've tracked the Mt. Gox wallet trustee here. And they can see, as you can see very clearly, the only major sell side event where they actually unloaded Bitcoin was back here in 2017 from 202,000 to 141,000. They essentially sat in the market top alongside the euphoria around the Bitcoin futures contract. So when I say that this is a significant event that could really drive some serious sell side pressure, and I can almost guarantee you guys here, they're not going to do it slow and steady. They are going to sell into euphoria. They're going to sell if they think that this is the highest premium they're going to get for the foreseeable future. I really wouldn't bet against the fact that they'll take advantage of that here. Not to mention, as they've initiated the refund process here, there is going to be people who are going to be withdrawing and selling. So the important thing to keep in mind here is that this time around, this is going to probably be a big event here, similar back to 2017. It hasn't been for many years, but now we are finally getting that process here. And the important thing to understand is, again, so far, that has not been any role in the sell side pressure. That's the big point I want you to take away. So there's still 142,000 Bitcoin. Doesn't matter if the trustee is going to keep it. Doesn't matter if they're giving it back to the users. There's 142,000 Bitcoin that are going to be likely hitting the order book in some capacity. And that's not going to be good for price. What we've seen so far is just the market reacting to the news. The next thing we have to consider here is the German government. Right, they've got about a $2.2 billion or 40,000 Bitcoin position. Now that has dropped about 20% here, roughly speaking, from the 50K position they held back a couple days ago, or a little around basically a little less than a half a month ago. But generally speaking here, that's a 10K Bitcoin sell pressure on the price. We still have 40K Bitcoin to go, and if the German government is going to continue selling like this, that is just going to add fuel to the fire here. It is going to make it even more difficult for Bitcoin to break to new highs and be able to really stop this downward sell side pressure. Now, what we're using here is a tool called Arkham. They're not sponsoring today's video, but this is a tool we've covered back in the past on the channel. We have had them as a sponsor. They're a really cool platform. And if you guys aren't using Arkham, it's entirely free. You can access practically every major feature of the platform for free. Arkham only has one thing where, like, if you want to get bounties, for example, on figuring out whose wallet address is who, for example, if you want to find out who the Winklevoss twins wallet address is, or some kind of entity or group, then in that case, you can essentially pay on-chain analysis experts to do that with Arkham token. Otherwise, you can search up like any wallet address you can think of. You can see how much the US government owns in Bitcoin, Ethereum, USDT, wrapped Bitcoin, and you can see here over time the change in balance over time, whether it be in dollar terms or actual native tokens. So in this case, we can see that the US government has a massive position in Bitcoin. They have, roughly speaking, basically talking about like 1% of all the Bitcoin that will ever exist. The US government owns. So the US government's in a pretty comfortable position when it comes to a Bitcoin, a sound Bitcoin future where that becomes the global currency of the world. They're pretty well positioned there at that hedge. But overall, you can see that that has been generally declining here. So again, that alone is also going to be adding sell side pressure as well over time if these governments start to really offload here and start to sell. Now, I'm not here to talk about the fundamentals of whether they should or shouldn't. Again, you can also track, I just wanted to showcase here, you can also track like fund managers like A16Z or like different venture capital entities, and you can see which tokens and on-chain movements that they're doing in order to spot potential distribution or sell side pressure. But the main point here I want to say is that all of these on-chain analytics are going to give you insights here into the broader picture. And what we can see right here, and I think this is a big reason why even with this incredibly solid rebound here, really the closing hours of the day yesterday from 54K here to 57K, why we are still struggling to get above here. Someone is distributing still at this range. And who knows, I'm not here to sit here and say, guys, that we can't get above that 9 EMA in the 4-hour time frame. I'm not going to sit here and be so tedious to say it's not going to go there, it's going to collapse. There will be periods of time where it might bounce up and get above the 21 EMA, maybe up to the 50 EMA, maybe even come up here to 60K, right? But the main point I want to say is how it interacts with those long-term moving averages and whether or not it can really hold is what matters here, right? So we've got to give it some time to do its thing. It's not about picking absolute bottoms. That is a very, very dangerous proposition. Most of the time, you will end up catching a falling knife and face more and more losses in the process. And I'm not here to do that. I'm here to see that the market has been able to build a new base, a new foundation, new support, and is able to really start seeing capital inflows versus the consistent outflows we've seen since back in March during this consolidation and correction range that we've been going through for the past few months. If I can see that change, if I can see a significant trend change, then I've got opportunities. I'm able to filter out, as I think many of you are as well, able to filter out opportunities in the altcoin space where I can make not just a 25, 50% return in the event that Bitcoin moves a little bit higher from here. You can make a 100% return, you can make a 200% return, 300%, 400%, and meme coins, that can go out the wazoo. You can make 5, 10x if you really nail your calls right and there's enough pressure and volatility in the market. So I'm waiting to strike at those opportunities. But if I'm not going to just try to guess and hope that it's coming into the market, I'm going to wait for price to give me that gauge. And the fact is that we've corrected over the past month. It's been exactly a month here from 72K down here to the lows of 53,000. And while we got a nice rebound over the past couple hours, we are still down below the 9 EMA in the 4-hour time frame. To put it in perspective in another way, we are right now, so long as this area cannot be cleared through, the prior support range from April of 2024 is acting as resistance. Until that gets cleared, we can't be too confident just yet, right? And I say that again, with our levels being hit here, I love seeing that. This is much more favorable, right? But it could very well be that this comes back down, chops in this range for a while. We're gonna watch to see how price plays out here with these moving averages. I don't need to capture a bottom to make money, and I don't need to, feed any ego of timing the absolute bottom, selling the absolute top. I just want to ride the wave when the market comes to me. And if the waves are not coming in, if the tide is not there, then I'm not going to risk my liquidity in any significant way. That's why, again, you can start to dollar cost average, have some exposure if you've been in cash and you're really itching to build a position, you think that the market's going to kick up, that's okay. But buy into strong narratives, buy into the plays that are rebounding well, that showcase long-term strength and consistency, and make sure that the stars are aligning. Typical percentage correction ranges look similar. You're getting above the short-term moving averages, strong narrative, all the kind of things that are going to likely give you an increased chance. Nothing's 100%, but an increased chance at potentially making money in the event of a broader rebound. We've come a long way here, guys, over the past couple of months. But I'm curious whether or not this is going to be able to substantiate a significant trend here over the next couple of months. When just kind of turn off our drawings here, right? Drop everything here, just take a look really at core price action, right? This looks shaky to me. I mean, what does this tell about the sentiment of the market here, right? It's still a pretty euphoric period versus where we were, say, back in 2022. I mean, really, we're where we were back in March of 2021. 3 years we've been pushing sideways. This isn't the altcoin market I remember. As we talked about, as you guys might remember, I'll close off on this. You might remember I did that video a while back, just where I was just talking to you guys and kind of rambling on about how I remember when I was buying into the altcoin market, when I was really building my first significant position, the others market cap, so this is all the places excluding the top 10, was at around $1 billion. In that period of time, back here in February, March of 2017. Sorry, actually more like 500 million to $1 billion. We could look at, for example, we could look at total 3, which is excluding Bitcoin and Ethereum. During, for example, July of 2017, that was just sitting here at around 14 billion. We're now at 557 billion. It takes a lot more liquidity and a lot more participants to really have anywhere near the same multiples, even a fraction of the same multiples. And we've discussed this point a lot, and I echo it so much because I think a lot of people think that history is just going to keep on repeating, that crypto is going to be as lucrative as it always has been. And if you've been getting that feeling, it's much more difficult to trade this time around, that you're not really seeing the returns you thought you did, or that you thought that you would, well, there's probably good reason for it. This market very well may continue to correct here, guys, for a long period of time. So until I see that trend significance here, I see that significance and shift, I'm remaining cautious with my capital. And we'll continue to watch what markets tell us, not what market analysts or the broader sentiment of fan bases of the crypto space tell us is going to happen. We need to listen to what price is telling us first and foremost. Then we lean into the data science, the on-chain analysis, and all these things to see whether or not we see an alignment there. So I I rambled out a good amount, guys. If you enjoyed this video, this weekend update, consider dropping a like. It's a great way to support the content we put out here on this channel. If you guys like this kind of analysis, if you want to get more insights into the kind of things I discuss, you can always check out the Dash report down below in the description. You can get 20% off if you sign up on an annualized basis. It's less than $1 a day, and you get a ton of great information. You guys can get access to some of Russ's trade alerts. You'll get access to my trade alerts when I make moves in the market. You get access to the 20 to 30 page plus newsletter report that we put out each month. You get access to the mid-month webinars. One will be coming up here in about a week, where you guys can ask me questions, all kinds of stuff. Even the discussion group as well, where you can chat to hundreds of DataDash members. So if that interests you and you want to support the channel and get some extra awesome content, then check out the link down below in the description at nicholasmerton.com/dash report. That's it for today's video, everyone. Thank you all so much for watching. I'll see you all in the next video on Monday. Take care, everyone.